But let's get talking about our markets and the correlation that we possibly have with the global equity space at this point in time, as well as the IIP figures which just came out. Sandip Sabharwal of Prabhudas Leela joins in with his view. Sandip, just give us a sense. There are a lot of global equity and important events lined up from the global space. Just give us a sense in terms of what sort of correlation are you tracking with our markets and the European markets at this point in time, and what is your expectation from Germany today?
I think what's happening is that the global markets are highly correlated, but what we've seen is that in the near past, at least over the last 4 to 6 weeks, European equities have clearly outperformed most other markets globally, and the Asian markets have actually lagged behind. And I think that's not really justified by the growth prospects which are there. So ultimately I think we'll see that the Asian markets will start performing much better. I think from the data points, last week was the ECB meeting, which turned out to be a positive data point. And now I think we have two events coming through. One is this German court ruling, where I think what they say will be of importance in the short run at least, and also over the medium term. So the expectations are for a positive judgment. So let's see what comes out. The other part is the QE3 from the US Fed, I think, which will be an extremely retrograde step, and I think that's something which should not happen. You just talked about the CPI data coming out of Germany and France. It's clearly elevated. Recent surveys in the US indicate that US consumers are expecting 2.4% inflation over the next 10 years, which is very high for an economy which is not really growing. So I think there's no real case for QE3. There's enough liquidity in the global market space, and it's not a question of liquidity, it's more a question of solvency today, where people, the countries or companies which people perceive to be having solvency issues, they are not getting money, whereas others are getting money. So I think QE3, if it happens, it might help short-term speculators, but I think from long-term stability of global macroeconomic stability, as well as for emerging markets like India, it won't be a positive step. But overall in the near term, I think markets look positively positioned, and my expectation was that the month of September could actually be a very positive month, where we could actually see a 8 to 10% kind of rally. We already seen markets move up 3 to 4%. So I think if we get a positive data point from Germany today, I think the rally could extend.
Okay, I'll come to your market-related forecast in a minute. Just to get your reaction to the IIP numbers as a market man, do you look at it at all, or any of the components that we rattled out?
Lata, I think all these data points have become actually they are not very important, because whether it's minus 0.5 or plus 0.5, it doesn't really matter in the overall growth scenario. What is very clear is growth is slow. There is slowdown both on the core side as well as on the manufacturing side. So I think there is a drastic slowdown which has happened in the economy, and which is reflected in the fact that when we are talking to companies, a lot of large companies, they are just not taking new initiatives. Everyone is just waiting to see what the government does or what the RBI does. And I think there is very little chance that we will see a significant improvement in the near term.
Fair enough. I guess it just confirms the slowdown that we all knew, and it's in any case lagged data. It's about July, and we have enough data for August now. But Sandip, you were speaking about your being positive about the equity markets. This 8 to 10% higher finish is with respect to the Indian equity markets. You think the September contract could end 8% higher than the previous?
I think because global equities are in a strong bull-up move, and I think before the month of September started, most investors were positioned for a negative September. That was also reflected in the put call data in the Indian futures market, where put calls had fallen to as low as 0.85. So I think people were positioned for market fall, which did not happen. Data points came out, especially from the ECB, which were supportive of the market, and to that extent the cash is now starting to get deployed. And as we all know that as the trend gets established, more and more cash on the sidelines gets deployed. And I think that's something which we'll see happening this month. Now, whether the markets will sustain at higher levels or not will more depend on how the policy action pans out and what RBI actually talks about. And those things we have to actually watch, because we've seen from the government side, even non-controversial proposals like FDI in aviation cannot get implemented. So to that extent, we have to see what happens.
Okay.
Sandip, in terms of a portfolio, in terms of a composition of an equity portfolio at this point in time, give us a sense in terms of what sort of allocation would you give defensives vis-a-vis anything which is high beta, which is trading at low valuations as well, versus defensives which are currently, at extremely premium valuations.
No, on defensives, I think FMCG space is something which is trading at extreme valuations. I think 35 to 40 PE ratios will not sustain over long periods of time. So that's one sector we are avoiding. But pharma as a defensive still has stories going around, and where there are significant growth opportunities for some of the pharma stocks. So that's one space which one can actually play for. But I think there's greater value today in the private sector banking and financial space, or the auto space, or well-established capital good companies. So I think those are the three spaces on the large cap side which we are allocating more. On mid caps, I think there are two theme-based stories which we are playing, which is one is aviation, X of Kingfisher, the two other listed players. And the second is the entire digitization space where companies benefit out of digitization. So there are 3-4 companies listed in that space, and I think all of them should do well.
How worried are you about the banking space, Sandip? Because we've heard from Deccan Chronicle now, and there's more concern coming in with regards to asset quality of private banks as well. What would you be comfortable with in the banking space, and how are you placed on asset quality trends for the remaining part of FY13?
The asset quality trends are clearly under pressure, but I think what will happen is that at the peak of the interest rate cycle, I think if we start talking about asset quality issues, I think that's slightly behind the curve. So I think asset quality concerns are for real, and for public sector banks they are more real, because PSU banks will find equity raising to be much more tougher than private sector banks because of the government holding and the constraints which the government has on fiscal deficit. So I would say those concerns are real, but they are reflected in the valuations. Like SBI trades at, I think, just 10% above its 52-week low, or 10-12%, whereas markets are much above that. So I think that's reflected in the valuations clearly.
But you're not fishing in any of these troubled waters now?
No, I think from our standpoint, the exposure we have in financials is in ICICI Bank, in IDFC, in Mahindra Financial, and to a very small extent in Axis Bank.
Okay. What about the sugar space? Will it give some bang for your buck, at least in this calendar year?
The sugar was a space I used to invest in maybe 4-5 years back, but I think subsequently I stopped investing because there's too much policy uncertainty surrounding the SMP or state advised prices, and whether the companies will actually benefit out of what's going to happen. So it's a very difficult sector actually to play for, and I think it's become more of a trading sector which moves on news flows. And typically I've actually personally stopped investing in this space.
Okay, Sandip, we'll have to leave it at that. Any disclosures you want to make?
We just talk about stocks which we have in our portfolios.
All right. Thanks a lot. Thank you very much for joining us with your thoughts on what's a crucial data point, but market correctly perhaps not paying much attention to what's really a lag data and unreliable.